Good morning, viewers. Welcome to ST Money's Morning Talk, your weekday business news. It's Tuesday morning, August 6, 2024, and I'm your host, Sunil Thakker of Sunny Talks Money. Let's roll. The Indian stock market highlights of August 5, 2024. There was absolute carnage and bloodbath on the Indian bourses yesterday. Equity bench indices, BSE Sensex and the NSE Nifty 50 fell sharply on Monday to end in the red in tandem with losses among global peers. At close, the Sensex was at 78,768 points, down as much as 2,222 points or 2.74%. Mirroring the Sensex, the Nifty 50 also tumbled 662 points or 2.68% to settle at 24,055. Bears took over as 45 out of the 50 listed stocks on the Nifty 50 posted a negative closing. Tata Motors, ONGC, Adani Ports, Tata Steel, and Hindalco were the top laggards, clocking up to 7% losses. On the PSE front, 28 out of the 30 constituents of the Sensex ended lower, with Tata Motors and Adani Ports being the top drags. Only Hindustan Unilever and Nestle India managed to end in the green. FIIs were net sellers of rupees 10,074 crores worth of stocks, whereas the DIIs bought rupees 9,156 crore net. In the broader markets, the Nifty small cap and the mid cap indices fell 4.5% and 3.5% respectively. The sectoral indices also faced mayhem, ending in red with losses in auto, metal, IT, and banking sectors of up to 4 to 5%. Bank Nifty slipped 1,258 points or 2.45% to end the session at 50,092. The fear index, that's then India VIX, ended at 20.37 points, up 42.23% amongst massive volatility. In other news, on Monday, August 5th, the Dow Jones Industrial Average fell 1,034 points or 2.6%, and the S&P 500 lost 100 points or 3%, and the Nasdaq Composite dropped 576 points or 3.43% to end at 16,200. The Japanese shares yesterday at one point exceeded their 1987 Black Monday loss and had their worst market crash since the day, falling 12.4%. For years, investors bought as assets and funded the trades with the yen. This was possible on the back of ultra low interest rates in Japan. Many hedge funds and money managers expected rates to remain low and the yen weak. Instead, the Bank of Japan increased interest rates by 0.25%, which in turn strengthened the yen. Investors who had borrowed yen to fund their trades have now been forced to buy more of this currency to satisfy overall collateral. That is pushing the yen even higher, prompting more margin calls. Investors are therefore selling their stocks to fund these margin calls. US crude oil is trading around 72.94 a barrel and Brent around $77.32 a barrel. Gold is trading at $2,411 per ounce in the USA, whereas in India it is rupees 6,513 per gram. Now, for today's outlook for the Indian market, the index has broken all its immediate support levels, although it managed to defend the crucial psychological 24,000 mark. Considering the unfilled large downside gaps for 2 consecutive days, bears are expected to maintain tight control over the market in the coming sessions. Therefore, if the index decisively breaks 24,000, the next level to watch on the downside is 23,625, followed by 23,176. However, in the event of a rebound, the 24,250 to 24,350 range is likely to serve as a hurdle on the higher side, according to experts. My take on the market is not to panic. Long term investors need to believe in the India growth story as it has a lot of steam to run its course for the next 25 years. See you tomorrow morning. In the meantime, let us know in the comments section what are your thoughts for the market. Happy investing. Stay inspired and remember it is all about money.